people have been, us included, anticipating this distressed wave of real estate, which has not come as quickly as folks thought, but it's also inevitable.
Okay.
Just because the refinancing rates are totally disconnected from the underwriting of a bunch of these properties. So the answer is no. We're focused on places we can add value, and we've got a new company called Wavertree Property Partners, which we've got development capabilities from guys that were with the LaFrac family for a long time. I mean, they're good developers. We think that the combination of financial expertise and redevelopment is going to be the key to making money going forward.
So a question that I have, Scott, is that we've all been waiting for this crash in commercial real estate, and there were some big headlines in 2023. There were some big office buildings that were defaulted on. But since then, there really hasn't been that much. It seems like properties are still not trading, maybe a couple here, there. Is that true? And is there going to be a moment where all of a sudden a ton of properties are going to flood the market, or is it just going to take a really long time to work this thing out?
Well, your observation is absolutely true. Again, people have been waiting for the tidal wave of stuff to happen, and where is it? There's $1 billion. Well, there's $1 billion loan portfolio on the market right now from a foreign bank that's just getting out of everything, and some of it's performing, a lot of it's not. There are a couple more coming later this year, but interestingly, as we discussed previously, so much of this bad debt is held in regional and community banks, and they're just extend and pretend. They're renegotiating the terms, they're putting out the maturities. They're never going to get repaid.
How long can they do that for?
Well, I think it's a regulatory matter. I think the regulators don't want to cause a banking crisis in an election year. So I think the thing that changes is after the election, the regulators start to, and again, this bank that's selling $1 billion portfolio, it's because it's a European bank, and it's because the European regulators are saying get rid of this trash. So I think that doesn't happen until after the election, but after the election, I think it really does.
Interesting. So 2025 could be kind of painful.
Yes.
We've been talking a lot about NVIDIA today and this hunger for AI and demand. I'm wondering how that is impacting commercial real estate. Are you seeing opportunities in data centers?
Well, yes. I mean, data centers are one of the big. Again, real estate. If you want to go by category, office has got issues, retail has got issues. Increasingly, apartments do to some extent, but data centers have just been on fire, and there continues to be an almost unquenchable demand for data center capacity. So yeah, I do think the bigger opportunity with AI and real estate, which we're working on with a partner, is to really synthesize the information in a way that help you make not just good commercial judgments, but informed commercial judgments, data-driven.
Scott, you've been in this business for decades. You and your team, everybody knows you. Every banker knows you. Every lender knows you. When you go out to buy a property today, you're the equity. Can you get a loan for your capital structure? Are the banks lending?
Well, that honestly is the big issue. That yes, the banks are lending, but at terms which are radically different than most of the current owners anticipated. So, somebody that has borrowed money at 3%, all of a sudden they get a term sheet back from the bank and it's 7 or 8% at the same loan to value ratios. So, that's what inevitably is going to cause a big turnover and a repricing of the industry. It just hasn't happened yet. And the subordinated lenders are in control of all these situations when that debt matures. It's just that, rather than pull the trigger right now, the banks, I think, have been encouraged to push it out for a year or two. So the problem is profound. It's identifiable. It's just going to take a while to to come to fruition.
I'm so interested in what you were saying about the regional banks, because when you joined us about a year ago, you were saying that you thought that there could be a crisis. So once we put this election past us, has enough extend and pretend happened that 2025 might not be awful? Do you think that there could be a regional banking crisis if the regulators wake up?
Well, I think it's going to take, as we talked about, a year. I think this is going to be a slow burn. I mean, this isn't an RTC type situation where they're going to, liquidate basically the government liquidated the whole savings and loan industry. So it was a huge opportunity that probably lasted 24 months. This is not going to be that way because this debt is all over the place. It's in really, bad refinancing, condition, but it's going to be a slow burn as opposed to everything happening at once. So I think the answer is there's going to be a lot more distress in 25, but the opportunity is going to last for a while for an investor.
Scott, here in New York City, there's so many families that are just own so much real estate here in New York City. They've been so successful over generations. Any of them stressed right now? Really financially stressed?
Some that have been more active developing recently. I'm not going to tell you who, but
Yep.
Yes, there are. The long-term owners who've owned for a long period of time. If you look at the New York market, if you own good office properties, as an example, the one thing that's really happening in the office market here is that all these buildings are being heavily amenitized. You look at the 3-star restaurants, the gyms, the places for tenants to hang out. That's the way that the classic, really high quality office buildings have been able to retain their tenants, and they're really in pretty good shape. A lot of those are owned by REITs, which tend to be low leverage, and a lot of these families don't have a lot of leverage. The people that are stressed are the ones that have levered up to do new developments, recently, particularly in the office space, that just haven't worked out. But there is going to be the winners and losers. That if you have, Class B, C office buildings, those are going to be really tough.